market gets wild, only one man rides it, the trading cowboy.
Boots on the floor, screen lights glow. Car like an open road, get it up, let's go. I'm the trading cowboy, stocks are my thing, and Q on the dashboard, hear that bell ring. Bear flags, bull flags, our rope and I brand. This could be the best 8 seconds ever hit this land. Ride those candles, ride that run, long it to the highs, yeah, chase that sun. Short it to the lows when the tide starts to set. This could be the best 8 seconds, yeah, yeehaw. I'm the trading cowboy, giddy up, catch that momentum, boy. Charts look wild, I just grin. One more trade, let the rodeo begin.
When the market gets wild, only one man rides it, the trading cowboy.
Boots on the floor, screen lights glow. Car like an open road, get it up, let's go. I'm the trading cowboy, stocks are my thing, and Q on the dashboard, hear that bell ring. Bear flags, bull flags, our rope and I brand. This could be the best 8 seconds ever hit this land. Ride those candles, ride that run, long it to the highs, yeah, chase that sun. Short it to the lows when the tide starts to set. This could be the best 8 seconds, yeah, yeehaw. I'm the trading cowboy, giddy up, catch that momentum, boy. Charts look wild, I just grin. One more trade, let the rodeo begin.
Are we building out a big bear flag, or
Trading
are we gonna
Cowboy
give
back here at the tack room.
rocket power?
It's looking uppity right now, right? It's looking uppers right now, chat. So PW's looking at the same level that we talked about, guys, 26,118. So that's the level. Remember, if you look on a 5-minute chart, it's forming out nicely now. You got higher, basically you got lows put in and you got higher lows on the 5-minute chart, guys, right? You can clearly see that. So you're getting some momentum back the opposite direction. Keep in mind, we pretty much retraced that almost 200 point drop, right? That we had, and you had a 200 plus point drop, or sorry, pump to the upside overnight. So that's done. So that's very interesting, guys, that we're kind of reacting bullishly off of that 26,118 level, which is yesterday's daily candles high. So I would not be surprised, guys, if we get more upside coming here. So get your seatbelts buckled up because we're approaching that 2 o'clock time frame.
It's either going to be a real fun afternoon or it's going to be a real sad afternoon.
I hope it's a fun one.
I might be crying. I might be leaving early.
Well, remember, I got 150 on the line. I'm trying to make like 450.
I might be leaving. I might be leaving.
So.
What do we got going on?
Oh, man.
Anybody trying to pass?
All right, man.
Let's see what happens here.
It's just crazy to think about, like, my whole entire net worth is based on what this man is gonna say. If he says the wrong things, then I'm screwed. Oh man, could you imagine? Like, when I was on there peeing, I was like, what if you just go put like fucking 20 contracts on in a live account and then just walk away? Peace.
But the problem is, like, we don't know, right? Like, sometimes you get a huge pump at 2, guys, and sometimes it's at like 2:30, right? That's the thing as well. A lot of times you get a lot of momentum right at 2 o'clock in one direction, and then so we got to see what happens here.
Small little pullback. 30 seconds right here, ready to go. What are we thinking, Outlaws? What's our plan? Whoa, big spike down. Down, down, down. Stalled. Staying down. Still pushing down. Up a little. Got a small quick trade there for about $100. Not very much, about a 13-point ripper right now. Kind of a rip your face off right now. Setting quick stops. In the money, another little $200 trade. Will it continue up? Maybe all the volatility is gone now for right now. Little pullback. Still going down. Still going down. No sign of stopping. Down about 600. If it breaks that low, still going down. Exited, looking for a new setup. Maybe a little bounce right there. Nope, still dropping, still dropping. May exit. Nice little pull. Come on, baby, push up. Keep pushing. Keep pushing. Took 2 off there. Still going. Stopped out. Just trying to ride those candles a little bit. Ride those candles. Back in 2. Stop set. See if we can get a push. It's a little bit. Keep pushing. No, keep pushing. Giddy up. Stopped out again. Sit back, watch and see if we can get a pullback to here. Anybody riding these candles? Back in right there. Thought we'd have a better push up than that. Sit in a second. Okay, I like that a little bit. See if we can get a push. There's the push. Stop set again. Trailing it. Stopped again. Probably back up to about where we were. Up 400 for the day. Took a big loss a while ago. Sitting back patient. Seeing what we can get right here. Watching. Kind of wanted to see if it came back down a little bit to retrace. See if we can get any continuation back to the upside. See if we can get a push right here. No push. Still no push. Bear flag playing out. See if we can hold this level right here. Candle's closing right now. New candle. Little push right here. No push, we'll exit. Look for a short. There's a little push. 30 seconds left on this candle. Give me a little more. Come on. Can't push. Get a little push now. Still holding on the idea that this would come out here and wick these tops. Another nice little bear flag trying to play out right here. If we break back through this 34. About 5 seconds on this candle. Not a bad close. See if we can get a little push up. There's our push up. Set and stop on one, on both. Gonna let them ride for a second. Oh, stop me right back out. All right. Well, let's reposition. Should have stayed in that a little longer, I think. Gonna watch now and see if we can clear this area. Trying to clear the 21. Good wick there. Maybe looking at a short right in here if it doesn't hold. I'm going to look at a short there. Stop about 66. Just to see if we can get that little rejection. There's the rejection. Keep pushing down. Keep pushing down. No. Gotta have that rejection, guys. There's the rejection. In profit now. There she goes. Up about 400, 380. Took one out, both out. Now we're up 701. Had to trail that because I saw that coming up right here and I didn't want it to come into support. So that 140, 141 is kind of come out as a support right here. Shows resistance there, support back here. Didn't come back down to it here. Still an overall bear flag, right guys? I mean, no matter what we look at, so.
Eastern Standard Time, we're in South Florida. Closes for an hour, reopens at 6 p.m. Correct. So that daily candle low has not been taken, chat.
Whew. Come on.
Kind of watching right here, see if we're going to gain a little support right here. Don't want to break this area right here. See if we can get a little retrace.
We appreciate the support. Like, I love you.
All right, we're stopped out there for now. I would take that trade every day, all day. So it is what it is. You can look. He just kind of was giving us the vibes. So. They just mad that their wife's boyfriend doesn't allow them to sit in the house while he's over there. I mean, don't be mad at me because your wife's boyfriend fucking parked in your spot at your house. You know, that ain't my fault, bro. Like, why are you mad at me about that?
Go home from work and he's
they're like comes home and his wife's boyfriend's fucking sitting there on the couch. You know, I get it. I'm sorry, bro. Don't be mad at me.
That's diabolical.
Came home early for lunch break and saw his wife's boyfriend sitting there.
Man.
Bro, come on. Are you kidding me, NASDAQ? Don't you fucking do this. Did I not just say it was going to fuck me? Like, what the fuck? Look at that candle. Look at the candle that stopped me out.
It's crazy.
Like, look at it. Look at that candle. It don't even make sense. It's not even a candle. Like, it's not even an actual candle. It's just like a little thing. Bro. Are you fucking kidding me? What is that candle? It's not even a candle. Oh, God. Do I short it again? I don't know.
I mean, it's looking... That wick,
I mean, we just
fucking the rejection off the.
I'm shorting it again.
Yeah, it looks.
I'm in with 10. This has always happened to me. Oh God. He's gotta laugh about it sometimes. Honestly, if it goes back up, it's funny. It's just funny. That's all. I'm just laughing about it. Nothing you can do. There's literally nothing you can do about it.
Trying to short right there. If it holds and gets back above this, we'll be out. That's our short playing out right there. Give us a little more push. We don't want it just a wick and come right back up, right? Alright, there's an indication we may be coming back up. Put this back in profit. Alright, there's our push down. There's about 5 points. Keep pushing. Alright, stop to sell. We got 5 points on that trade. Not the best trade, but we're trading FOMC, right? So we got to be fast. Got to be fast. See if this is a turnaround right here. So now we have this set in as our new line. Come on, baby. So now we're right here. Minor pullback. Try the long right there. Target the 21. See if we can get a little push. As long as our blue line of support holds up, we'll stay in the trade. If we get up 4 or 5 points, we'll set a stop right there. Good looking candle. I'm going to go ahead and move this up just a little bit above that wick. See if we can't get a good push. Struggling right here at the 40s. Need to get through 45 pretty quick to feel comfortable with this. Just can't get that push, guys. We're trying. We're trying. Kind of consolidating right here. There's the push down. Our support line held one more time. Can we get that push up though? There's our break. Let's see if it's for real. Give it one more chance. If it comes back down and retest that, we'll exit. Trying to hold above it. About 20 seconds left on this candle. Getting that push now. Good entry. I don't think we could have got much better of an entry. Let's go ahead and move this up to the top of this. Let's trail this right in here. Got 45s. That's what we wanted a while ago. If it comes down and stops us out, it stops us out. Looking for that little push. And we didn't get the push. Hey, we got 8 points on that, guys. Still pushing up. Trying to be safe. If y'all are still in the trade, I definitely target 166. Stop still below 28. Yeah, let's go. Definitely a range, Miguel. I don't know if you were here a while ago, but yeah, that drop ate me up, and we slowly gained it back as we came back to the top. I think we were down about 1,300. Now we're up 924 for the day on this new one, so not bad. Being a little more protective now because that drop really ate my lunch a while ago, so probably shouldn't be trading this, but just trading this for fun, right? Your trade of 8 and all that working now, Miguel? All good in the hood, I think. Mine seems to be doing pretty good. Overall, we go back to trading view. We broke out of this.
The anticipation right now. D-Money got daycare money on the line. He got diaper money on the line. If he don't hit, he gonna be buying those reusable diapers.
Oh man.
Looks like we should get some continuation to the downside.
Come on, NASDAQ. Be good for daddy. Be good for daddy here. Come on, come on, come on. Try to get filled at 26s, and then that way I basically make back that loss from earlier. If we can, oh my, no way. Should at least, oh my, no way. No way. Are you kidding me? It's not even funny. This market's not even funny right now. Yeah, I should have taken 10 points. You're right. You're right. Everyone's right. Everyone fucking in the chat's right. I can't deal with this anymore. Don't look at it anymore. Maybe that. Let's not look at it.
Yeah.
Well, it's bouncing off my yellow trend line, clearly. I might just get out here. Yeah, I'm getting out. I'm out. Fuck it. Now it's gonna pop straight back up, maybe. I don't know. Look at the fucking 5-minute candles. Straight back up here now. Yeah, I'll be all right, guys. Don't worry. We're gonna be all right. Why don't you guys trade FX?
Man.
It's a scam.
Yeah, been there, done that, chat.
It's a scam.
Yep.
Everybody always be asking, why don't I do this? Why don't I do this? Why don't I do this? Because it's all a scam. It's all a scam, chat. None of it's real. It's all a scam.
Been there, done that, guys. That was one of the reasons you don't have. That's the beauty of futures. The futures market, guys. At least you know that the price that you're looking at, everybody's looking at the same price, right?
That's
There's
true.
a lot of there was a lot of
true.
craziness, price manipulation in the forex market.
Oh my God, I'm rich. I finally make money. See, I told you I don't talk to anybody about it. Then the market makers don't look at me. Oh, no way. No way. You ever do that where you move your target? You put your target at a level and then you move it down and the candle just starts like going away from your target.
Yep.
You're like, come back.
It's like, nope, gotta
Push
go.
up. No.
Gotta go.
Come on. Come on. Come back up. Come on.
I'm gone.
Come on. You know, you're like, come on. Look, it's still doing it. It's fucking with me again. This shit's rigged. Turn off the monitor. No, no.
Making a nice little W for a win today, right, fellas? I like the way the 5 minute looks a little bit better than our 1. Made a nice wick down. Now we're pushing back over that wick. May stall out right here for a second.
So I ain't worried about it. I ain't worried about it. Ain't nothing but a thing, girlfriend.
We hit 50% above
All right, check this out. What we got? Any movements?
below the box.
A little bit of movement, a little bit of green happening here on these mentioned markets.
Just straight chop
Dude. See, the crazy thing is, like, I can't take profit on some of these positions, like, during the actual, like, news conference. So, like, right now, I'm up. I was up 500, up 300 on that one now.
Kind of slowed down now.
2:30 p.m. Eastern, live at the FOMC. Look at that big, beautiful building. That big, beautiful building that Trump could have made for so much cheaper.
Yeah.
If only Trump would have built that building, it would have been a lot better. Been huge. It would have been beautiful. Gold everywhere. Gold ceilings, gold floors. Been so much gold you wouldn't know what to done. Ooh, look at uncertainty starting to make a move.
Oh yeah, I see this thing running, right? I see the
Yeah.
dollars going in. Wow.
You'll see big swings. Sometimes
Yeah.
it'll literally go from like 99 to 0 and like swing around depending on like what he's saying. Because people are trying to predict, they're like trying to analyze like what's he going to say next, and sometimes like it's funny cuz you'll see it go to like 95, 96 cuz they think that it's like he's going to say it in
Yeah.
that sentence.
Yep.
So, I was also thinking about it too, like who I guess the people that are the big players here that are making these markets, are they like, do they have somebody at the fucking FOMC like with like a direct feed? You know what I mean? Because there is an advantage to that. Because like
yeah.
if he says something and it's sitting at like 50%,
Maybe invalidating right here.
so I think
So
there's
it's like
obviously
it's already
always,
ahead. They already got the
yeah,
feed,
there's always a delay. See, like right now, uncertainty is moving up. We're up 10 cents on that.
Kind of right together. Big drop right there.
And so,
Cow must be
come on,
starting.
come on. Nasdaq's still going nowhere.
Be careful, guys.
Hopefully for
Be careful if you were long.
Powell. Look at that. There's a short.
Yeah.
There's a
flush.
short.
There's a flush. Going into the. It's going to be expected right now, right? Because you're going into the.
Oh,
230.
come on.
Test at the bottom, maybe. Push back up.
Dude, is the Fed, are they playing music on the live stream right now? Is that coming from their stream?
Crazy movement, guys.
No way.
Back over here. Trading view really don't show that. And he hasn't even come in the room yet, I don't think, fellas, but what a crazy move. Anybody catching this right here? Anybody who take that long right there at that drop? What a move. And he's starting at the podium right now, guys. See if we can get a little bounce off the 21. Stops in place. 6, 7 points. A little too fast, a little too fast. What a rush though, huh? Play it off the 21 again. See if it holds. Not gonna hold. One more try right there, see if that bottom holds. Just kind of playing out.
Labor market
Softening hit?
indicators suggest that conditions may be stabilizing after a period of gradual softening.
There he
The
goes.
unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average
Say
pace
eggs.
of 22,000
Say eggs.
per
I
month
dare
over
you.
the last 3
Fuck
months.
dare you.
And we got saved again, guys, so done with that account. Got 1558 for the day on it. We'll go ahead and move over to another one. Guys, this is definitely not any technical trading at all.
And boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based.
Imagine being able to build an app with your name on it, just by thinking about it. Meet Base 44.
For the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 3/4 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to
Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul
See if we can get a push back over our highs right here, 175s. In theory, maybe we could get a pump back to 195, unless Powell says something he shouldn't say. There we go. Oh, right back down. Keep 6 points of profit, 120 bucks if it stops us out. Kind of see if we can do that or a quick run over here, over this. I'll bring that back down to break even. See if we can get that push. Trying to get above that 50 ORB below the box. There we go. There's a little push. What a ride. What a ride. Ride those candles, H-Town. Ride those candles, buddy. Gonna bring it back to the bottom of that wick there. Get us 7 points, 8 points right there if it comes back. Come on, giddy up. And stopped out. Looks like it wicked right down just to take us out. 160 bucks on that. May look at re-entering again.
Nick Timros, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today on, I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today. But
it's Ashley's biggest mattress sale of the year. Shop incredible President's Day deals like a free adjustable base with select mattress purchase.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. Not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the U.S. currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But, what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Got in a little late. May stop me out real quick right here, but yeah, sure did. Checks, guys.
And sentiment, the beige book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting,
they're trying to hold up about 800, 600, kind of fluctuating. Gonna take one off right there to give it to me. May have to exit manually if I make too much. And exit. Alright, so a little too fast. 1468, so I can make a few more bucks on that, but not much. Need to get it up to about 1500 for the daily. Nice little eval for the day, so makes 2 of them already, plus 2 of them on Top Step. Get half the day on both of them, so got 4 evals halfway past. Gonna look in here and see if we can't get. Need about 40 bucks, guys. See if we can get about right there. All right, there we go. Got that one set up for the day. 1534. Got this one set up for the day. 1558. Nice day overall, guys.
People, they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy is significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course no one knows with any precision. Is that, you got to follow up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, 3 Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira. Thank you, Chair Powell. Mara Mokway from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to inflation have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the two goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, ex the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see.
Took a little trade on one of my fundage right here, up about 200. Gonna trail it pretty tight, 285, 255. Took one off already. Stop at 170, stopped out. Not bad, got 427 on that trade. Little quick entry, can't really call those out. Just playing straight momentum. Playing some of these shelves right here.
Fed chairman before May. What does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished. But they still exist, so there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew. Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market.
Don't really want to see it go any farther than that. We got this shelf right here, back here at 101. We can hold that right there, maybe build out a little bull flag or push up to the VWAP, back up to 208, 213. Be nice to see.
Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments, too, on inflation, though.
And if inflation does pick back up and the labor market doesn't show for...
There may stop me out, keeping my stops tight. There we go. Up 470, 440. Gonna go ahead and close these out if they get filled. All right, and that's pretty easy, guys. Waited for this to reconfirm. Waited for it to push back up to that 185. Looking for these highs. Got to be careful with this account. This is a new funded account. So got it up to 840 for the day. So kind of done with it with the consistency rules. This is one of the Lucid Pros that we passed yesterday. So got a consistency rule on there we kind of got to be careful with. So hey, that's how we do, right? We look back over here at our trading view.
Have remained pretty, they haven't moved a lot really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment, and so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with, and that in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be effects of longer-term rates from our moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So this isn't, I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, it's, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Looking for tool storage that's both affordable and built to last? Choose the trusted durability of U.S. General from Harbor Freight. With a full selection of colors, customization options, parts, trays, and more. U.S. General, only at Harbor Freight.
That's now resolved, or how much have we seen a kind of real underlying firming up in the state of the labour market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. It's just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook, or strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially the economy has once again surprised us with its strength, not for the first time. Consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from. But the economy overall, the growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing.
When the market gets wild, only one man rides it, the trading cowboy.
Trading cowboy stocks are my thing, and Q on the dashboard, hear that bell ring, bear flags, bull flags, a rope and I brand, this could be the best 8 seconds ever hit this lane.